Good. Let's start with the housekeeping. So, you know my name, Carlos Leon. I the host of this series of payment system broadcasts. Today, we're going to discuss with John Jackson from Bank of England and Stephanie Haffner from the BIS about Project Meridian FX. That's the topic of today. As usual, we're going to have these 5 minutes of housekeeping. Then we're going to have a lively, very interesting discussion with John and Stephanie that will take about 45 minutes. And we're going to try to leave 10 to 15 minutes for your question and answers. So please send your questions through the Q&A widget if you can find it, because this version of WebEx is changing some things, or you can send them through the chat directly. That's fine. So, as I just mentioned, we're going to have Stephanie Haffner from the BIS, advisor at the BIS. She's an advisor at the Eurosystem Center on assignment from the Banque de France. And we're having John Jackson, head of the Payment Strategy Division at Bank of England. Welcome, Stephanie and John. Thank you very much for joining us today to discuss this very interesting topic. I don't know if you want to introduce yourself a little bit and perhaps to give us your disclaimer, if any.
Thanks very much for having us, Carlos. Good to see you / meet you all online virtually. No specific disclaimer from my side, so I'll pass on to John.
Yeah, same here. No specific disclaimer, just to say, central banks have lots of different roles in payment systems, and I come from the operational side. So thinking about kind of operational policy and strategy. So not a supervisor, but somebody who is supervised.
That's great. Thank you, John and Stephanie. So before we start, I'm going to perhaps to give a very brief description of what we're going to talk about. We're going to talk about Project Meridian FX. This is a collaborative experiment between the BIS Innovation Hub and Bank of England. And the purpose of this experiment is to explore the use of a synchronization operator, which is an agent, let's call it like this, to achieve the simultaneous or synchronized movement of central bank money across different RTGS systems in different jurisdictions. This initiative builds on prior research, which was also called Project Meridian, testing around synchronization mechanisms, and obviously sets the stage for a broader conversation on how this model might evolve in other asset classes and jurisdictions. So once again, welcome Stephanie and John. If you're okay with it, let's begin. So we're going to start with you, Stephanie. Could you give us a quick overview of Project Meridian FX? What were you aiming to explore in this phase, and how did it build on the earlier work around housing transactions?
Yes, of course. And actually, maybe I'll start adding to John's previous disclaimer on his current operational role to say that although the Biz Innovation Hub is made up of many technologists, economists, and legal specialists, my area of expertise is more in the regulation area. So there could be some very technical questions from the audience that go beyond my area of expertise. So just that extra disclaimer to add. But very happy to speak to you all about Project Meridian FX today. So if I start with a bit of an overview of the project and what it covered. So Project Meridian FX is a recently published BIS Innovation Hub project that experiments with the concept of synchronization to conduct foreign exchange transactions across RTGS systems based in different jurisdictions, as you laid out, Carlos. So the project has its origins in Project Meridian, which was finalized in 2023 and run by the London BIS Innovation Hub alongside the Bank of England and John Jackson here. And that project experimented with synchronization via a synchronization operator. So we'll both get into the more detailed role of what a synchronization operator does a bit later. But firstly, to define synchronization, this is the concept of atomic settlement involving the transfer of two or more assets, whereby the transfer of one asset occurs if and only if the transfer of the other asset also occurs. So this can offer a reduction in frictions, costs, and can reduce intraday exposure in security markets. Project Meridian was able to achieve synchronization by interlinking the central bank's RTGS system with the digital deed operator and the land registry to conduct a UK housing transaction. The Project Meridian report recommended applying this Project Meridian prototype to FX transactions in order to address some of the current challenges in the FX market, including many of the aspects you're probably all familiar with in this room: fragmented data formats leading to delays and costs, complex and varying AML CFT checks, and RTGS opening hours restrictions. So such an experiment, they foresaw, would need to involve simultaneous actions in RTGS systems in the two jurisdictions, whereby synchronization is achieved by symmetric instructions being sent to the two RTGS systems. So Project Meridian FX's aim was therefore to successfully orchestrate the settlement of an instant FX transaction. And a second objective they had was to conduct synchronized settlement of an FX transaction involving ledgers based on different technologies, so including distributed ledger technology, which is important for future central banking use cases to ensure market participants using DLT can settle in central bank money. So essentially, the project tested mock connections between the Bank of England's CHAPS RTGS system and the Eurosystem's Target 2 RTGS system in order to demonstrate a successful GBP to Euro transaction and vice versa. And so for this reason, Meridian FX was a joint project between two biz innovation hubs, the London Centre and the Eurosystem Centre, of which I'm an advisor. It also involves 5 central banks: the Bank of England, the European Central Bank, the Banca d'Italia, the Banque de France, and the Bundesbank. And finally, just to say here that the experiments were quite similar in nature to the set of experiments run by the Eurosystem and the ECB last year on new technologies for wholesale central bank money settlement. And their report was just published last week and experimented with the same set of EU solutions that ours did. So Meridian FX is really just adding an international leg to this good set of EU work. Just a bit of a framer to say that as well. I'll pass back to you, Carlos.
Thank you, Stephanie. That sets the scene pretty well, so we know where we're going to talk about very clearly. John, from your side, can you introduce the synchronization concept and explain what's driving the Bank of England's interest in synchronization amid the RTGS renewal program?
Yeah, will do, Carlos. Thank you. So yes, as you say, this is the right umbrella to start with. Is we've just spent the last, let's say, 8 years being charitable, renewing our RTGS service. And that's something that we've talked about on a previous broadcast, actually. Pleased to say that since that last broadcast, the new system is now fully live and fully operational, and so far so good, is working smoothly. And within that program, one of the key aims that we set out at the start was around interoperability. And one of the key aims underneath that interoperability banner was the idea of making sure that even though we were building RTGS on existing kind of centralized technology, that we would be available to interact with a wide range of new payment systems or financial market infrastructures that we thought would evolve, particularly driven by enhancements in technology, things like DLT and API and other sort of technological innovations. And so as we were in the process of developing RTGS, we knew that we would have, or we expected that we would have innovative new customers who wanted to get access to central bank money in different ways. So the old RTGS service already had a number of different payment systems who we acted as settlement agent for. Those were mostly UK-based retail payment systems, or the sort of sterling leg of card schemes. So it was quite simple deferred net settlement interface. And synchronization was one of the ideas we developed as how can we go beyond that interface and provide something that will be kind of provide additional added value and provide the type of interface that these new infrastructures will want to have to achieve atomic settlement. Just briefly say, there were actually 2 different ideas that we ran in parallel. One of them was our omnibus account concept. Now, because that was more of a legal change than a technology change, we were able to implement that on the old system and it then carry it over to the new system. And that's what Finality is using at the moment to connect to central bank money. But we also thought that it would be important to offer a kind of different sort of arrangement. Finality arrangement, the omnibus account arrangement, is almost sort of taking a portion of our balance sheet and finding a legally safe way to pass it off to another payment system and let them back the movements on their ledger with that kind of held portion of liquidity in that omnibus account. Synchronisation is aiming at something more kind of flexible and more tailored to individual solutions. So the idea of it is that a synchronization operator, just another name for a payment system, but a payment system using this particular interface onto RTGS, is able to get this two-stage process of controlling money on our accounts, but without ever taking ownership of them or without ever transferring ownership of that money outside of our existing RTGS accounts. And what they're able to do is earmark funds on those accounts, and then once they're ready to make a movement, probably against a movement in another ledger, they're able to release those funds. So that idea has been in the blueprint for RT2 since the start, but it obviously needed us to rebuild the settlement engine, go live before we'd be ready to build it into the new service. So that's why it's been really valuable for us, I think, to do some experimentation so we can actually engage with real synchronization operators and sort of demonstrate to the wider community the potential this settlement model has. And that's why, as Stephanie set out, we started out by saying, well, let's take quite a simple use case of delivery versus payment in a digital housing deed. That's a good place to start. And then, as she says, at the end of that project, it kind of said, well, an obvious extension would be to move to a slightly more complicated situation. And so we moved into a situation where we wanted to experiment across different central bank ledgers and in the FX space. And that's how Meridian FX came about from our side.
That's great. I have let's say a slight clarification. When we're talking here about atomic settlement, we're talking about the simultaneous exchange of the assets, not necessarily the immediate one. I mean, because there is like some still, let's not call it misunderstanding, but there's a discussion in the industry about what atomic settlement is. Right now, when we're going to talk about atomic settlement, is just simultaneous exchange, not necessarily immediate, right?
I think that's absolutely right. I think we use the word synchronized. It doesn't necessarily mean that the settlements happen immediately. In fact, in a way, the model builds in a definite delay, might only be a few seconds between earmarking and then releasing. It's also not trying to guarantee that the movement happened on exactly the same physical second on the two ledgers. It's trying to make sure that you have if and only if kind of settlement. It only happens in sterling central bank money if and only if it's definitely going to happen in the other ledger and vice versa. And we'll get into a bit how, depending on what this project showed, is that depending on how the process of releasing funds for settlement on the other side works, the way you achieve that, what we're calling atomic settlement, is slightly different. But it's about making sure that you only get one side settling if the other side settles. So you're achieving PVP and DVP.
Exactly. Yeah, that's the point. And that's precisely perhaps the next question, which is to talk about the synchronization operator itself, which at the end is at the heart of the project, but it's not always very easy to define and to have like some clarity about what it's doing. So Stephanie, in Project Meridian FX, could you explain a little bit what the synchronization operator did? What were the main results of the project regarding how the operator or what the operator does?
Yes. So to define a synchronization operator, it's a technology neutral interface which coordinates the simultaneous exchange of assets across payment systems. So in our project, the synchronization operator used API connector nodes to connect into two RTGS systems and executed the transfer of an instant payment versus payment FX transaction across accounts in the two RTGS systems. And as I've referred to before, the project was also able to connect to a DLT-based settlement platform, allowing us to test this interoperability between existing and new ledger technologies as well. So in terms of what the synchronization operator did in our project, so on the UK side, we built an emulator to facilitate interaction between CHAPS and the DLT platform. And on the EU side, the Eurosystem's 3 potential solutions for wholesale central bank settlement were tested. And these were the Banque de France's DL3S solution, the Banca d'Italia's TIPS hashlink solution, and the Bundesbank's trigger solution. These are the same 3 solutions that are used in the ECB's recently published experimental work. And then in order to test these solutions, a technological prototype for our project was built, which hosted both the UK and EU synchronization operator nodes on a joint platform, which connected into the solutions on either side of the transaction. So the synchronization operator then worked in 3 main steps. So first, it matches the 2 legs of the transaction, which has been agreed outside of the platform. Secondly, it instructs the 2 RTGS systems to place earmarks on the funds in the accounts. And thirdly, it requests a fund transfer or earmark release between the 2 accounts. And then in terms of key findings, at a high level, Project Meridian FX was able to demonstrate that firstly, a synchronization operator could be agnostic to the asset or fund of the transaction involved, as well as to the technology of the ledgers. Secondly, it was able to exchange via 2 wholesale payment infrastructures if at least one of them can earmark funds, the other doesn't necessarily have to. And thirdly, a synchronization operator was able to conduct payment versus payment FX settlement without taking on credit or liquidity risk and without the synchronization operator needing an account in the respective RTGS system. So that's it in a nutshell.
That's a great explanation. Thank you, Stephanie. John, from the Bank of England's perspective, can you highlight the main results and insights gained from the project?
Oh, you're on mute.
Thank you, Stephanie. Yeah, Stephanie's covered some really key points there, in that I think it was really helpful for us because in the previous experiment, Meridian, it was we didn't focus much on the way that the digital housing deed moved. We kind of took that almost as an exogenous sort of approach. I think being able to answer this question of is synchronization only going to work across multiple central bank ledgers if they've all designed it exactly the same way, or is it going to be is this sort of orchestration concept going to be flexible to variations in the way the interface works? That's a really important result, I think, because every RTGS system is subtly different, and so the way that you would engineer earmarking and settlement release would be different depending on how you've designed your core system. And so giving us a sense that, well, if this can work with both TIPS kind of hash link and trigger solution and DL3S on the other side, this is not something that's highly sensitive to the precise design. This is more of a robust concept than that. The second thing I think was really important was the ability in the experiment to do some testing of not just individual atomic settlements of individual transactions, but some kind of gathering up groups of transactions and settling them as a way of sort of trading off speed and liquidity efficiency. And I think we'll come back to that. But that's particularly important for this market, I think, for FX. And then the third thing that I want to mention, alongside the things Stephanie mentioned, is that we did look at a sort of an extension where you had this idea that could you actually synchronize between 3 currencies simultaneously and use one of those currencies, presumably a more liquid currency, as a kind of bridge currency between two currencies that might not be actively directly traded with each other. There might be sort of liquidity challenges. So if somebody's trying to trade from 2 people are trying to exchange 2 illiquid currencies, they might do a kind of back-to-back set of transactions. And could you settle that back-to-back set of transactions in one go? And again, in a more stylized setup than when we did the 2 ledgers, but when we did the 3 ledgers, we mainly used emulators. But again, it sort of showed that this concept is probably not only doable for 2 settlements at the same time, but in principle can be generalized more broadly. I think the one other thing I would say, just to mention it, is, as always with these experiments, part of it is bringing it to life and helping you visualize it. So even though the experiment itself was only looking at how you would sort of engineer how this works, I think it did give us a lot of food for thought about, well, how would you supervise? How would you gain assurance over this synchronization operator if they were there? And actually, Stephanie and I were at a workshop last week where people were asking us a lot of questions about that. And I think there is something about doing experiments that just brings things to life and makes you go down those thought processes. So I think it was helpful in just making us think, to visualizing what this would look like in reality, and then starting to think about policy work streams that we need to run alongside the technical work streams we need to deliver to put this interface live.
That's great, John. Now we're going to go to the efficiency point that you said that we were going to get back to it, and this is the time to do it. It is very interesting because, I mean, in the previous broadcast that we had like a couple of months ago, we had a very interesting broadcast with CLS. And what we learned from CLS is that at the end, the FX market is about efficiency. So we heard from CLS that the liquidity efficiencies that they're able to save like 99% of the liquidity. So in Project Meridian FX, you were able to introduce liquidity saving mechanisms, and that's very interesting. What are the main insights from introducing those LSMs into the FX synchronization?
Yes, thank you. So first of all, just a couple of mini disclaimers, because you made the point about CLS. Is to say, this was a conceptual experiment, so we wouldn't be able to sort of put figures on savings. And you guys know, because you're the experts in modeling LSM, that in a way, the amount of saving you achieve depends completely on the kind of nature of the transactions and the sort of way that you as a user trade off speed and efficiency. So what we aren't trying to do in this is sort of put a figure out there and say you could save X with this, because it perfectly works for CLS because they have real transactions and real preferences of their users, and they can show that. In this case, it was more conceptual. I think the right concept to think about here is about how liquidity saving mechanisms work in the typical RTGS system. So the idea here was kind of to offer a hybrid form of settlement where you can either choose, if you think a particular transaction is very urgent, to submit that and ask the synchronization operator to just do the 2 legs of that completely in isolation. And at that point, you're getting no liquidity saving, no meaningful saving. But also the idea that if there are a bunch of transactions that still want to happen on the same day, but you're happy to wait some minutes or hours, can you bundle those up and then submit them all for synchronized simultaneous settlement? So there was no netting and tearing up of transactions here. All the transactions maintain their individual consistency, but they would settle with the same timestamp in sterling RTGS and in euro RTGS. And that way, debits and credits sort of organically offset within that package of transactions as they're settling. And I think I think the experiment, particularly because we've just been designing our LSM for RT2 as well, I think it basically did bring out that actually the same thinking about how you can introduce sort of, you can give the synchronization operator and by extension their customers the ability to customize how they choose to sit, where they choose to sit on that liquidity immediacy trade-off, applied in this world as well. The main technical differences were that you needed a different sort of message type to introduce the messages, because instead of sending the equivalents of a PAX 9, you were sending a kind of PAX 29, which is a kind of bundled up sort of settlement message. And so it required your synchronization interface to be able to accept groups of transactions and then settle them on the same logical second. Because we've already built that into RT2, and lots of central bank RTGS systems have those kind of things. I don't think that's a massive technological step. And then it gives the power to the synchronization operator and their customers to just decide what to send down the fast lane and what to send down the slower but more efficient lane.
That's great. Thank you, John. You both have mentioned about the technical challenges about aligning systems that are not the same, that are local or national systems. So, John, what did this project reveal about bridging those technical gaps?
Yeah, I think as Stephanie kind of covered, for example, if you take the TIPS hashlink interface, that is a kind of a means of triggering settlement, but it's not. It doesn't permit two-stage commit settlement. It doesn't permit the earmarking stage. It just goes straight into settlement. So it's a clever overlay onto an instant payment system in this case. And what it showed is that provided that you have the earmarking functionality, in this case on the sterling leg, you can commit the you can earmark the funds in sterling. Say you've got a sterling euro transaction, earmark the sterling funds, then make the euro transaction, and as soon as you see evidence that the euro transaction has happened, you commit the sterling leg. You're not going to get settlement at the same time, but provided you've put the right legal protections around the earmark and operational protections around the earmark in sterling, I think you're still achieving the concept of PVP. You're not achieving it perfectly simultaneously in time, but you're achieving that. Similarly, I think there was so that was the main insight. I think the sort of ancillary insights that the partner on the project, who was acting as a synchronization operator, Partior, would be able to sort of show was that there was also just differences in the way the interfaces were for these different interfaces. They accepted different types of messages and different ways of earmarking or triggering settlement. And so I think it just shed some insights into the challenges that a synchronization operator would have dealing with multiple ledgers that require different informational formats or different kind of business processes to make actions happen. I don't think any of that came out and showed, oh no, this is insurmountable, but I think there's useful learnings there. And I guess some of those learnings, if central banks eventually were trying to make this work in real life, that those learnings would be helpful in thinking, how can we make our interfaces as homogeneous as possible?
Thank you, John. That's great. Stephanie, something that you want to add about how to synchronize heterogeneous systems?
Yes. So just to add a bit of an overlay message to what John already provided in a really good detailed way is, so I think that with regard to interoperability, our experiments were able to show that a single synchronization interface can serve as an integration point across really diverse central bank solutions, whether they're based on DLT or not. So as John said, it achieved fund reservation or earmarking when supported, and settlement finality across different types of settlement systems. And this really highlighted its ability to adapt and with a technology neutral design. And so I think also the various different solutions that were used in Project Meridian FX were also really able to show the flexibility of the RTGS systems themselves in being able to connect to different types of settlement through new infrastructures. And the ability for the synchronization operator to exchange via two infrastructures, if at least one of them can earmark assets or funds, means that in principle, the model could be applied to several different jurisdictions, even those without their own interoperability solutions. And so I think alongside the 2023 Project Meridian report, which looked at the housing transactions, Project Meridian FX has provided evidence that the synchronization operator model can really be agnostic to both the asset and transaction involved and the technology of the ledgers. So we were really able to prove our hypothesis here and highlight areas for future exploration in different markets.
That's great, Stephanie. Thank you. So let's go a step back and let's talk about why this matters beyond the experiment itself. So the BIS Innovation Hub often frames this kind of work as creating public goods, which I think it's very clear it is, that is the case. Stephanie, how do you envision this work being picked up or extended by other central banks?
Yes, so as you noted, Carlos, the mandate of the BIS Innovation Hub is to develop public goods in the technology space to support central banks. So therefore, the hub isn't necessarily in the business of assessing the commercial viability or future existence of the outcomes of its experiments. So in this project, just to say, we didn't go into assessing the commercial proposition of introducing synchronization operators into the FX market, but instead we see that this assessment could be undertaken as a potential next step by any interested central banks or even competition authorities or emerging market participants. But if synchronization operators do catch on, my own view is that these would likely to be offered by existing financial market infrastructures or banks. It could even be offered by brand new emerging firms. But I see it as probably more likely because of economies of scale that it could be existing financial firms that expand their offerings to act as synchronization operators.
That's great. Thank you, Stephanie. John, a few weeks ago, we read about a fully digital property purchase in the UK. I mean, outside an experiment, I mean, it was live, real, where the synchronization operator, in this case, PEXA, UK, enabled the settlement of funds and the lodgement of the title with the land registry. So now we have the possibility of having FX. We have also property purchases. What are other use cases for synchronization services in CHAPS?
Yeah. So just to say a couple of things on that experiment on digital property. First is to say this synchronization idea is not something that we've just come up with for the first time. There are central banks who have very similar interfaces already in place. So Reserve Bank of Australia has been settling property transactions in high quantities using a similar interface for many years, working with PEXA and one other synchronization operator. Also know that Swiss National Bank has their RTGS link, which is very similar again and has been settling money market transactions for many years. So there's definitely evidence that these things can work. In the UK case, in the PEXA case, PEXA is one of the firms who's very interested in using synchronization interface when we build it. But because they wanted to come to market before we had our new RTGS service live, they have been using our deferred net settlement system to achieve this. So it shows that you can achieve a digital purchase without using a synchronization interface. But I think there are good reasons to think the synchronization interface would be more flexible and easier for them to use in the long term than the deferred net settlement approach. In terms of other use cases, we do want to do more experimentation on this. We've done quite a bit of market outreach recently, and definitely informed by all the really interesting experimentation ECB has been doing and others. I think people have said that intraday repo, sort of same day rapid kind of collateral movement, collateral substitution, cross currency, same day repo, and basically a set of use cases which are about being able to better, more closely control the mobilization of margin or collateral are of particular interest, both because things like move to T+1 in securities, just general speeding up of the move that's happened over many years to kind of algorithmic trading and much faster, higher frequency trading, it sort of puts stress on the speed at which people need to secure borrowing, secure transactions, pledge margin, things like that. So we're definitely going to do a follow-up and actually go that looks at those kind of use cases. And this is where we can go back a little bit to your question to Stephanie. In terms of building public goods, the great thing is with the BIS Innovation Hub that once we've done the experiments, we've got access to some of the code. So there's some of the RTGS emulator code, for example, that we can just reuse without having to do such a big experiment and use their technical support and do an experiment where we look at a simple kind of tokenized bond setup and see how we could do intraday movements in that space. So I think that's a very promising avenue as well, and really sits at the heart of central banking, which is about, trying to make, liquidity move more efficiently, trying to remove exposures, trying to make, financial market trading safer. So I think property, FX, kind of collateral movement of tokenized assets are the three main ones. More speculatively, and probably something that will take longer, things like efforts to digitize something like trade finance, or to try and digitize other kind of transaction chains, fit a bit like the property one in the end of if you've made a lot of progress in digitizing the rest of the transaction chain, then if you can then do straight through settlement into central bank money, that's a really nice outcome. So I think there's a bunch of different things where you can imagine the driver wouldn't necessarily be synchronization, but if there's a drive to do digitization in the transaction chain generally, synchronization can be a nice sort of addition to the end of that chain. And then I would say there's a lot of interest at the moment across different sort of orchestration entities who want to be orchestrators, who are thinking about orchestrating simultaneous movement of central bank money and commercial bank money. So kind of in this RLN concept space. Mm-hmm. And I think we've had conversations with the UK kind of version of RLN, sort of saying, well, if you go down a particularly orchestration-based route, the ability as one of your settlement options to settle in sterling central bank money via synchronization is quite, wouldn't be the only settlement model you're using, but it could enable movements in commercial and central bank money and potentially other new forms of money to be synchronized. So I think that's the other broader, slightly more speculative use case.
Thank you, John. That's a very interesting. Those are very interesting insights about where other synchronization models could work. And we're getting to that point of this conversation, the last question, in which normally we talk about the future, and you already started talking about the future, John. So that's great. So the first question that I had is very similar to what you just mentioned, John. So perhaps this will be the opportunity for Stephanie to step in if you have a view about the future, and I think that we all do, which is looking beyond FX. What else do you both see synchronized settlement models having an impact? And I would also introduce an additional point here, which is this synchronization something that could, let's call it, replace or be an alternative, let's say better, to experiments about wholesale CBDCs as means to introduce new features to RTGS or large value payment systems? Stephanie, let's start with you.
So John has covered some future use cases of synchronization really well, but just to say here that I agree with what he said, and I think the key principle of synchronization is that it aims to be applicable to multi-asset classes to settle in central bank money. So there's really a big host of different types of asset markets that could be used here, which John outlined, and we're actively thinking of other use cases or experiments that we could investigate here. And I think if we go to your second question on wholesale CBDC, I see synchronization as being a complement or partner to wholesale CBDC. I'd say. So wholesale CBDCs have already really existed in practice for decades by providing an efficient digital infrastructure for the settlement of transactions between banks and central bank money. But wholesale CBDCs still need to be modernized and allow for the inclusion of market players who are adopting DLT for wholesale payments and securities settlement while still allowing them to access RTGS services. So I think synchronization can be one of the options to play this role, given that it successfully connected RTGS systems with DLT-based settlement platforms, which showed its interoperability capacity between these existing and new types of ledger technologies. So ultimately, synchronization could be kind of a means to transferring that wholesale CBDC. But yeah, I'll pass on to John next.
Thanks. Yeah, just two takes on it. First of all, just to say what the future looks like from the Bank of England perspective. So from our perspective, all this experimental work plus a lot of co-creation work we've been doing with prospective synchronization operators and with our direct participants who are interested in using these services means we're close to sort of having worked out what the actual high-level design for our synchronization interface will be. And our intention there is to try and put something in place that we hope can have a sort of simple design that is usable across lots of different use cases. The steps that we envisage taking to get there are, first of all, next year we want to put live a kind of synchronization lab. We're calling it that in that it's a lab, it's not real central bank money. It will be something a bit like the kind of apparatus that was used for this experiment, but made available to a bunch of different synchronization operators who want to use it, who want to sort of tap into the APIs. And the idea there is, why are we going, even though we've done more testing, why are we going for a lab rather than straight to live? It's sort of based on our sort of understanding of where our synchronization operators are and what it will take for them to get to market in real life. Because I think there's some really brilliant ideas about how to use this, but we've seen how hard it is to convert great ideas into a great product that actually people are using. Like switching costs are really big in financial services. People are very rightly very conservative. And so we think by creating the lab and letting them do some experimentation in there, they can sort of show that the participants, well, here's how good it could be. Here's how it could save you liquidity. Here's how it could cut your credit risk. Here's how it could, deliver a great service to your customers, to help them then build a sort of strong kind of support base before making the investments to go live. And while we're running that lab, we can then be working on actually the program, developing the synchronization operator functionality into RT2 with the intention that we would put that live hopefully in 2027. And so those firms could come out of that lab having kind of proven it, understood it better, we will understand it better, and we will have more chance of putting something live that people are ready to use rather than just it's a great idea, but nobody can raise funding or nobody can convince because it's going to be a big job to convince direct participants to let these firms have access to their accounts, even though they're not having to pass the money over to them. It's still, your RTGS accounts are right at the core of your operation. So from the bank's perspective, we feel we're going to continue doing experimentation, partly to shed light on how to best design synchro, but also to shed light on your other question about where will synchronization be best and where will other models be best. I don't think it's going to be one model is best in every context. But while we carry on doing that experimentation, we've got this two-stage process to get to live. Then answering your question about could synchronization be an alternative to wholesale CBDCs? Definitely yes, I think. And I think one of the reasons for that is because they are, in principle, a lighter touch way of integrating. For a start, if you want to do something like this FX model, and let's say you wanted to do it across, it's going to work. You're going to need a number of currencies to make it have economies of scale and scope. So you're going to have to connect into several different central banks. And I think connecting in via a synchronization interface is going to be probably, for now at least, much easier than connecting into separate wholesale CBDCs. Secondly, even for central banks like ourselves, building a new platform like a wholesale CBDC is a very big lift, and you would really need to know what you're building it for and why. And so I think most people are coming around to the idea that something like synchronization doesn't have to be exactly like it, but something like this is going to be the best way to let new innovators come and get into live central bank money in a realistic time frame. It doesn't mean that then longer term you might not get big network effects playing out, particular new payment systems getting real scale, and at that time it might make more sense to have a dedicated liquidity link straight into their ledger. And so one of the analogies people use a bit for this is like the emergence of interfaced versus integrated security settlement models. When they emerged in the 80s, 90s, 2000s, generally interfaced emerged first. And then, once it became clear, CSDs had very high sort of economies of scale. So you ended up with one per country generally. And they were doing very high transaction volumes. It made sense to move into a more kind of unified ledger kind of world. So that doesn't mean that we'll definitely follow that entire curve, but I think Synchro is a very, very credible alternative, much faster to market, much lower impact in the near term. That doesn't mean it will be the technology that every payment system uses forevermore. And that's why we want to keep experimenting in the unified ledger space as well, I think.
Thank you, John. We've reached the end of the questions. Thank you, John and Stephanie, for brilliant insights on this topic. So I'm going to start with this question, which I think is very interesting, and I would like to add something to that question, which is, would a synchronization operator be required to be regulated? And I would add something. Is a synchronization operator an FMI, a financial market infrastructure, or not? What do you think?
Let me start off on that, even though I claimed not to be a regulator. But still, as an operator, we do, it is an important question. Our thinking on this is that, yes, a synchronization operator is a payment system. The question of whether then it needs to be regulated slightly depends on how your sort of recognition regime for payment systems works. So in the UK, we don't actually regulate every payment system, or not all payment systems are captured in regulation. It's kind of a threshold type model where they need to be designated as systemically important, and then they get the full PFMI kind of regulation. So I think our expectation, but we're still working on this as an active piece of policy work, is that when synchronization operators first go live in the UK, they're unlikely to meet that threshold. And so what we would probably do is we as the operator would do assurance over them and provide some level of assurance that they have good risk and governance processes in place. But it would probably only be as they grew and started to become critical to the functioning of a particular market that then they would be
I think we lost John, I think.
Have you lost me? Sorry. Am I still here?
Now you're back. You're back.
I think we just got an automated message, didn't we? The second point I would make is that we wouldn't necessarily expect that every part, they are somewhat safer than some of the models of an FMI because they never hold the money themselves. So it doesn't mean they're not a payment system. It doesn't mean they don't need to be regulated, but obviously that would condition the way you supervise them. And I think the threshold for them becoming systemic is low, is sort of, they would do more activity before they become systemic than, for example, something using our omnibus account where we sort of give them a portion of the balance sheet. So that will affect exactly how strictly you supervise them, but yes, I think they would eventually be supervised once they became important for market functioning.
And
Stephanie, would you like to do it? Yeah.
Yeah, and I agree with everything John said, and I think this is a really key question. It's one that interests me quite a lot, that I think about quite a bit as well. And I think, as John was touching upon, the question becomes, once the synchronization operator does grow in size and number of users and market share, then what? Then who regulates it? In what jurisdiction is it regulated? To what laws does it adhere to? Then do you need to set up some sort of college of international supervisors and regulators, or some sort of oversight committee, the way that we see with FMIs like CLS and SWIFT, etc. I think we're still a very, very long way away from that reality, but it may be the case in the future, and then we do get caught into these quite big questions. So for now, it's one to keep an eye on, but eventually, yes, I agree with John. It will need to be regulated and supervised.
Thank you, Stephanie and John. I'm going to blend two questions from the audience. So the first part of the question will be like, how scalable do you believe this synchronization model is across different markets? And the other question that is related to this is do we need to ensure fair access for smaller or less connected economies, which would eventually get the scalability of this type of model? What do you think?
Sure, I can go first. In terms of the scalability question, we don't know, but I think the potential is a large one. We, as John alluded to in the Meridian FX experiment, we did test PVP VP, or PVP plus PVP, however you want to refer to it. So sort of the use of a vehicle currency for two illiquid currency pairs. So it could be the case. Maybe we could have tested PVP VP VP. We could have gone further to see how scalable it could be. And yes, I think, you know, as we said before, these experiments were able to show that RTGS systems are flexible, and the type of infrastructure is flexible enough that various different types of RTGS systems could be brought together within a single synchronization operator with multiple different number of nodes, and we don't know yet what that limit could be. I think, you know, there's still questions if this does come into operation in a more widespread way about settlement finality, about the user controls over earmarks, and whether there are regulatory or legal implications of earmarks preventing them from being used for other purposes. And for that reason, we also experimented with user controls in our extension objectives. So there's still definitely questions to iron out, but I think the scalability is potentially quite vast. And in terms of safeguards for fair access for smaller or less connected economies, I think it goes back to the point that a synchronization operator would be able to potentially bring in smaller and less connected economies in a different way from other big services that we see today that potentially have quite a large fee to entry, or only allow for certain sets of currencies to join. The synchronization operator could be a much cheaper and easier way for these sorts of less connected economies and currencies to participate more in the FX market, and therefore become more liquid as well. So I think it's definitely a positive for those types of economies. But I'll pass on to John.
Yeah, no, but I think that's a great point you make there, actually, that once the synchro operator got something like this FX arrangement working in a few currencies, I think it'd be greatly in their interest to then just keep expanding the window. And actually, it's probably an easier way to bring on other currencies than a grand unified sort of ledger. I would say a couple of things. One is to say, just from a kind of, this is not something we've been able to prove by experiment. This is just a guess based on my intuition. My intuition is that if you're making up to sort of thousands of transactions a day in an RTGS system using a synchro operator, I think that's super feasible and easy. If you start getting up to the tens of thousands and hundreds of thousands via a synchro interface, it's not saying it's technically impossible at all, particularly not if you're doing some of it as bulk submissions. But I think you'd be starting to get to the point at which there might be a more efficient way to connect up that payment system to your ledger than through a kind of two-stage commit process. And that's what people found with interface settlement. So I think there are potentially scaling limits, but they might not bind for a very long time. And it'd be a great success story if they do. And then I think the other thing I would say is that the other constraint that's worth being aware of here is that they need the RTGS system to be open for this synchronization interface to work. It's not an offline interface like deferred net settlement or omnibus. So if these things start to be successful, it might well require payment systems thinking about how they extend their operating hours, which obviously is something we're doing already for other reasons, but it's another driver as to a reason why we might want to move towards 24/7 if this takes off, to enable synchronized settlement over longer periods.
Thank you, John. Thank you, Stephanie. I'm going to take the last one, which is, will there be any connection or synergies between Meridian FX and the recently announced Bank of England DLT challenge?
I think that's one for me. I'll let you off that one, Stephanie. Yeah, I think not in terms of I think the two experiments have synergies because they're probing different ways of tackling the question of interoperability. So they have synergies from the perspective that they're trying to look at the same problem from a different end of the telescope kind of thing. And so that's why. And so I think they have synergies in that they're part of a broader series of wholesale experiments trying to think about under which conditions which particular central bank interoperability model is going to be best, what are the different innovation challenges or technical challenges we're going to have with each thing. So it's in that context that it is complementary. It's actually a very different approach that's being looked at there.
Okay, I think that we can close for today. This is a wrap. Thank you very much, Stephanie and John, once again. Those were brilliant, very interesting insights about this topic. So thank you both once again. Thank you everyone for attending, and let's see once again in our next payment system broadcast number 23. We'll let you know what is it about in the next weeks. Thank you everyone. Have a nice day.
Thank you for having us. Bye.
Bye.